I am here with Marin Katusa. Marin, thank you so much for joining us today.
My pleasure.
Yeah, I can't tell you how excited I am. I newly introduced to you in the last 3-4 months. In that time, have been blown away by what I've learned. And for everyone here who's watching this, let me just say who you are a little bit and tell people what your background is. Marin is probably the preeminent investor, advisor in the natural resources, precious metals, rare earth mining space. Yes?
Pretty much, yeah.
Marin's recommendations have outperformed literally everyone. Marin has built 3 hedge funds from scratch?
4.
4?
Yeah.
Okay. Marin works with some of the top investors in the world, getting them into deals that on the ground floor before anyone else has access to invest in them, which also provide additional benefits than just share price and equity. They also provide warrants and other equity benefits, yes?
Correct.
Okay. We all like winners. Since I've known Marin told me to invest in a couple things. You picked KL, Kirkland Lake, when it was at what?
The original price of that 2015 New Market, which merged with Kirkland Lake, was $1 and change and ran to $60.
Yes.
In 4 years.
That's a pretty good return.
That's a good one.
I got into Kirkland Lake at 22. Didn't quite get that gain. Pan American Silver, you did a 75% gain in a short period of time.
Less than 5 months.
5 months. Liberty Gold, you have been preaching since when?
The first time we wrote up Liberty Gold would have been about October 2017. And I'm open disclosure, I'm one of the largest shareholders, and same price as my subscribers. Always, whenever I write something up, I'm always the lead order, and my subscribers, if they choose to play, they play at the same price. And we take 0 fees from the financings, okay? So it all goes to the company. And at that time, we picked up the stock under 47, and I said buy it under 40, and some people got, myself, some subscribers got it at 35, 37, 38, and it's been and I still think it's going higher.
Yeah.
Open disclosure. There's risks always to these stories, but they are onto a world-class discovery. And we were Katusa Research was the first to publish on it. We were the first at site, and that's something that I'm very big on.
Yes.
A lot of these companies, like Equinox, I was the first one to write it up. mCloud, all these different type of ventures that I get involved in, like Liberty. Whether it's my desire to get the scores for myself and my subscribers, or ego, or all of the above, when you love what you're doing, it ain't work.
Walk me through that process a little bit. How do you go about identifying those opportunities? How do you go about then?
Sure.
You also not only recommend when to buy, you also recommend when to sell.
And my subscribers get to sell before I do.
Yeah.
So we can walk through the first one you mentioned. So the Kirkland Lake's most famous deposit, or the best deposit, is called Fosterville. It's probably one of the highest grade mines of that size that I know of in the world. And it was in a kind of fractured company called Crocodile. And when the guys took it over, see, I have the advantage of being in Vancouver, and I'm one of the largest financiers in the game. So when someone has something, I usually get to see it first because they know I'll move quickly, I'll drop everything, I'll fly around the world to go
and your
look at.
subscribers get a first bid into that opportunity.
So when we did the New Market, the first meeting the company had, Doug Forster, who's the brain, the geological brilliance of recognizing Fosterville, it was with us in our office. And we just ripped through the numbers. Rob and I just worked like dogs to get this over. Over 3 days, we did nothing else, day and night. And I said, this is it. So I said, I'm going to buy 9.9% of this. And I published it, and I told everyone, this is the price I'm paying. You can get it at the same price. And it was a unique ARB because a fund blew up at the time, and they were blowing out a third of this company, and you could buy it at a discount. And you just got filled, and it was like 99 cents.
Do you take any positions that aren't strong? Do you just like kind of throw little feelers in, or you leap with everything in full force?
Well, we do it in tranches, right? So my first tranche was always buy 25%, just like in Liberty. So we got 3 of my 4 desired tranches. So we built up a big position in that one because I just saw the value. And I published that this will be a 400,000 ounce producer one day. You wouldn't believe the hate mail I got. People are going, what are you, smoking in Vancouver, blah, blah, blah. And it turned out that I underestimated it.
Right.
This thing's now going to crank out close to 1 million ounces. This is a monster. Same thing when we did Liberty Gold that you were talking about that you bought. That was in a company called Pilot Gold, and it was run by Mark O'Day, and they had all these assets in Turkey. And I've been to Turkey a bunch of times. I'm like, well, I didn't think the company was cheap when it was $3, and it was called Pilot Gold. Then Turkey happened, management changed, and I saw a press release pop up, and Cal Everett becomes president of Pilot Gold. Well, Cal Everett in 2005 won the Murray Pezim Award for Financier of the Year. He was one of the biggest investment bankers in the business. He's a very close friend of mine. I see this, whip out my cell phone, phone him right away on his personal cell. I go, get out of here. You're joining the other side of the street, because he was on the banking side and he became a president of the company. So the first meeting he ever had as president of Pilot Gold, which then they changed the name to Liberty Gold, was in my office. And I didn't yet get involved. It wasn't until like a year later that when I went to Black Pine and our team saw what we saw, we did all the due diligence. Then I was so convinced on this, but I have a team of geos, probably one of
Independent team.
independent, and I got a guy named Ron Peratt. You may not have heard this name before, but he's had 2 serious discoveries. Twin Creeks, he was part of Santa Fe, and the discovery team on that, it's produced over 10 million ounces, and it has over 10 million ounces left. It's a monster deposit in Nevada. He also does part of the discovery team of Long Canyon that got bought out for $2 billion. It's also one of the highest margin producers for Newmont, and it's also in Nevada. And I thought, I got to get my buddy Ron out here, so I organized for him to do a site visit. And I go, Ron, here's my research. This is what I think is going on. Tell me if I've missed anything. He came out and said, Marin, I think you got it here. And so he joined on as an advisor to the company because he believes so much into this asset.
Right.
And at that point, we published our research and we thought, this could be big. So it's very rare. Like, I'm very disciplined in my way. I say take a Katusa free ride, so take your principal off the table if you got a double, and let the rest run. On this one, I believe the market yet hasn't figured out what Black Pine has, and it's going to get a lot bigger very quickly. And it's one of the few that I haven't sold a single share, nor am I.
Wow.
So that's kind of my process.
Let's take a step back for a second, because our audience is really looking at a macro story. They're looking at the things I'm talking about, which is debt and a devaluation of currencies.
Yeah.
I believe we're at a turning point here, and you're going to see a shift in mindset in the way people invest. And I believe you're going to see a lot more momentum into this space. And tell people why miners provide a different type of leverage to just the spot price and how that works. Because I think what would be valuable for people is to understand a few things. That physical holding is an important part of a portfolio, but that miners and other access to actual companies in the space provides even bigger opportunity, but more risk.
Correct.
More volatility, and some of the ways to be thinking about that.
So let's break it down to 4 equity positions. So you got your royalty guys and streamers.
Okay.
They don't get involved in the mining and moving trucks. They're financier guys. They're guys like me that crunch numbers, go to site and do their thing. So you got good guys like Randy, who runs Wheaton, or Pierre Lasson that runs Franco-Nevada.
And what's the big thing you guys are looking for at that stage? Just
See,
geology? Or management, or
all of the above. It's an investment into the asset. And really the advantage the streamers and royalty guys have is they trade at or near or above NAV. So, Nevada trades at 1.8 times NAV. Silver Wheaton trades 1.6. Nolan, who's a close friend of mine, Nolan Watson, runs Sandstorm, runs about 1.4 NAV. So a mining company that isn't yet producing an asset, let's just say it's your gold company.
Okay.
And you got whatever you want to call it, but you haven't built the mine yet, but you've de-risked it, and you're going through the permitting process, but you're trading at like a 0.3 NAV, 0.3 of its net asset value at a 5% discount at, say, 1,400 gold.
So you've got a 5 or 6 multiple built into that.
Yeah, so these streamers, it's about cost of capital. So do you dilute, if you're the mining company that wants to build, do you issue shares at that valuation? Or do you say, hey, I'm going to take money and at a fixed, let's say a stream, and I'll say 5% of my gold production at $700 gold for 30,000 ounces a year for 10, whatever
And these opportunities you provide your subscribers at this
No,
level?
that's the royalty and streaming companies.
Okay.
So that's one subsect that, that's
Makes up the story.
the lowest risk way to play the equities is the streamer guys, but they're not cheap. You're never going to get that 10-bagger or 5-bagger type of thing.
Okay.
Then you got your big caps, guys that produce north of 2 million ounces, the Barricks, the Newmonts, those kind of guys. And again, they're trading at or near NAV.
Okay.
Or even above NAV. Some of them, like Barrick, trades at a premium to NAV because the investors are going, well, they've got this pipeline and they're producing and the leverage to price the gold, they can move.
And they're in the index and they get
Exactly,
that
the passive
momentum.
buying.
Yeah.
Then you got your mid-tiers, which is where I find really interesting. Like you mentioned, Equinox. It started in my office, one of the largest shareholders of it. One of my favorite people in mining, a very close and dear friend, Ross Beatty, is the chairman and largest shareholder. It started with nothing 3 years ago,
Right.
and this year it's going to produce over 700,000 ounces. So the mid-tiers are, that 500,000 ounce to 2 million ounce producers, and that they get into the VanEck and all the different ETFs and the passive buying and all that type of stuff. And there you get your organic profile and you get your re-rating when you start getting into that. So next year, Equinox will be a 1 million ounce producer from their organic pipeline of assets.
And they will be
so
moved
then
into
you
the
get,
ETF? Into the
They're starting now to get
Okay.
into the ETF because of the size. They meet the
Yes.
metrics to get in. But they're
Okay.
trading at a 0.8 NAV. All their peers trade at between 1.3 and 1.8.
So you like the story here.
Oh, I'm talking my book,
Yeah.
but my subscribers are in at the same price as me.
Right.
But you can look at the NAV and go, wait a second. If you're now a smart passive manager, they're not stupid computers. These are smart going, well, do I want an IM Gold or an Eldorado? Or wait a second, look what Ross Beatty's doing with Equinox. Maybe we should buy that, and it's cheaper, and that's going to get bid up in the share prices. That's the third subgroup, the mid-tiers. Then you got the juniors who are either producing small amounts, under 500,000 ounces of gold a year, or they've got an asset they're looking to explore, like a Liberty would get into that speculative angle. So I stay away from the big caps because how do I compete with an ETF and these big funds? And I'm not playing this to get, a 1.2% dividend from some of these guys. The mid-tiers, where you get the big bang, is as you go from that low NAV, like an Equinox, and you get in, and it's lower risk than a junior, that's how you're going to get a double or triple in a mid-tier. And the juniors, I love finding an asset that has a lot of historical drill holes. So you take Liberty, their Black Pine asset at 1,800 holes. You go through the data and you can start modeling what you speculate your own numbers. And that's where you have a team and you do due diligence and you try to speculate on what I think this asset's going to have, and then the market starts waking up.
How much? Walk me through this because if I buy into, I like this story long term.
Yeah.
But I want to have a leverage play. What does a $500 increase in the price of gold, $2,000 gold, do for those types of assets?
Well,
and why does it?
So it's
increase their
inversely
values?
correlated. The lower the risk of the investment, the less that move is going to make. But we're talking about a $500 move in gold. It's a big move.
Sure.
So everything that is in my portfolio and I'm invested in is economic at $1,250 gold. $1,550 is fantastic. It's like a printing press for us. $2,000 gold, amen.
And then the company's profits significantly
Correct.
rise at those levels.
But
'cause
also
their
remember
costs
the
are baked in.
governments will start increasing taxes. All those other aspects are going to follow, right? That's why there's also a discount to, when we talk about NAV, that's why I like to have assets in good political jurisdictions, but not just being a one-asset company. And I've been doing this for 20 years. I've learned the game. I was one of the founders of Copper Mountain, which was Canada's third largest producer. I was the youngest guy on the TSX board, being a director. I was the youngest guy ever to go on to that in the mining side. And we were a one-asset company. And we always traded at a discount because guys are like, well, what happens if BC shuts down mining? Which is ridiculous, but you get that discount. So if you're going to play the mid-tiers, you want that portfolio to diversify. The juniors, generally speaking, are, you're a one-asset company most of the time. So the trick is finding multiple assets, and then you have your big upside. But if you get a $500 move, I think, unfortunately, you're going to see not just the good companies move up, which they should, but a lot of crap move up, and a lot of people that shouldn't be getting financed. So that's also a risk. So $500 could be a curse for a lot of people because they're getting involved in things that they shouldn't be financing. Things that aren't supposed to be financed are going to be financed.
Yeah, and I think this is exactly why, if you are going to play in this space, you absolutely need someone like you who can walk through all of those considerations, because it is incredibly volatile. It's very difficult if you're just blindly picking, because, and believe me, as I've watched a lot of people do exactly that. They think that the space is in a good position, so let me just start spreading my money around. And I watch it regularly, and I see that gold can move, $100, $200, and these miners go down. And you need someone who can really point in that right direction.
And you don't need to own 50 stocks. The biggest mistake people who subscribe to newsletters is, why would you ever follow the advice of someone that isn't investing with you at the same price? That's insanity to me, number one. Number two, skin in the game of the management. So when you look at every company that I invest in, I have a rule about what is our cost base, my subscribers, versus the management team's cost base. And in the case of Equinox, my subscribers are at a lower cost base than the president and CEO.
Right.
That's a good place to be.
Yeah.
Now, more importantly, if you take a chart of the insider ownership of each of our deals that were invested, take Equinox, for example. Mm-hmm. The average of the mid-tier, so again, let me remind, mid-tier is 500,000 ounces to 200,000 ounces of gold production per year. Okay. The average ownership is about 1.1% of insiders, like the president, CEO, the board members, management. They own about 1.1% of the company. Equinox is 12.8%.
Good indication.
So it's a good indication. Just simple things like that. But that's just part of the story. In every story, you have to ask, what is a management's ownership and what is their cost base? Now, when you talk about gold coming in at $500 on top, where these stories are going to be multiples of where they are now,
right?
Then people are going to be rushing in, but on the wrong entry points.
Sure.
You want to be investing when it's not popular. I call it a page 16 story. The page 16 that no one pays attention to, and it's a small, really small font print. That's what we're doing right now. When it's on the front page and everybody's talking about it, even people that don't like mining are going, there's this mining stuff. That's when you sell and move on. Okay.
We're going to take a U-turn. I know you're very limited on time, but I have a question, because you're a New York Times bestselling author. You thought a lot about politics. You're talking in your book about Iran. Mm-hmm. We've just had a big situation going on there. I'm curious if your perspective from when you wrote the book, which was in 2014?
Correct.
If it's changed given the growth in shale in this country, as well as what's happening politically. And I know it's a broad question.
Yeah, so I call it the reverse of the petrodollar. So I had a whole chapter about petrodollar. And back in 2014, I talk about how America's only way to independence is to develop its own unconventional fields.
You did.
Now we're there. 6 years later, America potentially could become a exporter in a big way. But you got exporter of oil, but more importantly, it's the reversal of the petrodollar. Me, America, sends you US dollars and our protection, the military. You send me oil from the Middle East. That was the old setup of the petrodollar.
Right, exactly.
Now, I don't need your oil.
Yeah.
But at the same time, I'm not pumping out all those US dollars.
I'm also not protecting you anymore either.
Exactly. So that's what you see going on.
Right.
And this is this huge paradigm shift. And if you look at, you want to talk about how valuable gold is, look at it from a Iranian standpoint, from a Turkish standpoint, 100%. From a Argentinian, Venezuelan, even Russian standpoint.
Sure.
So there. Sadly, I don't know if I want to see what the world will look like when gold is $5,000. It will come. Mm-hmm. I don't know when, but what has happened with the instability of not just the reversal of the petrodollar, but geopolitically. Sadly, for the Iranian people, I think it's going to be this, things aren't going to change to the way where their freedoms will be like ours, but it's not going to be so controlled by the hardcore religious as it was. Sure. So it's going to find this middle ground.
Okay.
That's where I think it's going. Ironically, Iran has some world-class deposits, not just in oil and gas, but if you look at some of the things that you wouldn't think about, like zinc, they have some of the best zinc deposits in the world. Copper, gold. It's so wealthy in the ground, not just on the energy side, but on the metal side, true metal. And also you're looking at of all the Middle Eastern countries, one of the highest educated sub 35-year-olds where they
Is that
just
right?
really want to go. So
Right.
one day the Pandora's box will open. I just don't think it's going to happen yet.
Okay. We're going to end with the question that I've been to 2 of your events. So this is the question you've asked at both of them. 2020 election, who's going to win and why?
I think I'm not an expert on the American politics, but I think if you're betting against Trump, you must be thinking that something horrible is going to happen, or someone who hasn't been in the candidacy on the Democrats. So either Michelle Obama comes out or Hillary comes out, but Bloomberg came out and he's spending more than anyone and is not moving up at all. They're kind of like a ragtag of B stars trying to fight a guy that is the economy's going. So I guess my final statement on that is it's all about the economy.
Yeah.
And if what Trump did
The
with
economy meaning the stock market, basically.
correct. And
Yeah.
but even the unemployment numbers are strong. Like he's got a good stock market and an employment market. And what he did in the Middle East there, specifically with Iran,
Yeah.
he made all the right moves.
So let me follow up that question. It's not my final question. It seems to me you're seeing Bernie Sanders really raise a lot of money. Pretty obvious he's going to be among the finalists
Yep.
on that stage in March or whenever that comes. And at some point, I believe, if he is the actual candidate, you could see exactly what Trump is worried about, which is investors pulling back, saying, wait a second, I see where this could potentially
self-fulfilling
go.
prophecy. Yep.
100%. And then, of course, that only then speeds up, because we're in a momentum machine, as obviously.
But he's got the advantage of the Fed spigot. They
Well,
lower,
does
right?
he? I mean, they're on hold during the election. It's part of one of the
Yeah.
challenges, right?
Trump will do everything
Yes.
and anything to keep the machine going.
Yeah.
And I think if Bernie is the candidate, I think you'll have a real hardcore left come out, but there'll be that moderates that are like, this
tough.
doesn't make sense.
It's tough.
So as twisted as Joe Biden is, and I'm not left or right, I'm Canadian. We're like Switzerland of North America, right? I get along with everybody.
Yeah.
Joe Biden kind of will be the most diverse, and he'll pick someone to.
So you like Biden to be the guy?
Not that I would like him to be.
No, I mean, you
but
expect him to be the
I
guy.
expect him to be,
Okay.
and he'll probably tap into, will Elizabeth Warren kind of shot herself in the foot here recently?
Yeah.
So he'll probably tap into that left audience through an unconventional VP candidate, right? So we'll see.
I'm eager to talk to you more. And I hope we'll do this for everyone in a more specific way where we can really take action. I just really want to introduce everyone to you. And one last thought, because the book I'm writing is about the super cycle and 90-year timelines and the idea that we make the same mistakes over and over.
Yep.
And I know that the policies of the left, from the Bernie Sanders and the Elizabeth Warren, sound really extreme to a lot of people. But I want to remind everyone that FDR in 1932 sounded really extreme to the people in 1929 in the peak of the Roaring '20s, which means that in a crisis, things that you think are crazy then become necessary.
I totally agree with you. It's not 2020 people have to worry about.
Yeah.
It's 2024.
Yeah.
It's the AOCs, that world, that Bernie world, is her normal world.
Yeah.
And everything will that left will now shift along that age paradigm where the millennials start getting older and those
So we're
roots
having
of
it's battle.
right. It's a true battle,
Yeah.
and I don't think the millennials will win this round with Bernie, but he'll become a martyr within that community, and that is the martyr that AOC and the likes of her are going to use for 2024.
It's a wave that's coming for sure.
Totally, and ironically, the greatest benefactor of that is gold.
Yeah.
Right, because
Real quick, why?
well, you can't devalue gold. You can move it around. You just got to be careful where you put it. Don't show it off. Don't go call your buddies over and go, hey guys, just don't tell anybody. Check this out.
Right.
Don't do that.
Right.
Be smart about where you put it. Also, be careful who you buy that gold from. It's
Sure.
such a critical part. I remember in the last big cycle when we got to 1900, so many scoundrels were trying to sell gold. I can get it at a discount. No, you can't.
Right.
Okay,
Right.
you cannot get it at a discount than what's going on in the spot. There's something wrong with that gold.
Sure.
Don't be buying from the Mexican dealer in the back alleys, and this is Mexican gold. Be careful about that. And I'm not speaking out the Mexican, but that was one story that broke out here in Vancouver. So be careful about doing it, and just plan. Be prudent. The speculation, I tell people, never put all your money into speculation, and more importantly, figure out how much you want to speculate with,
Yeah.
and never put all that into one speculation either.
Right.
Be really disciplined and savvy. And the number one rule is, when I tell my subscribers, they subscribe and they I want to buy this stock now. No. I use the analogy of an alligator. An alligator just chills out and takes time.
Yeah.
So you talked about the Pan American. We made a little over 75% in 5 months.
Yeah.
But it took 6 months for my position. And people are going, you're crazy. It's not going to hit that price. And I go, guys, just be patient. And it came down. And it came down. And it came down. Then for a month and a half, you could have bought all you wanted under my guidance price.
And then you knew when to get out too.
Right? So
Yeah.
once I've got to that 1.3, 1.4 NAV, I'm like, you know what? I'm happy with this. Making 75 or 80% in 5 months,
Not bad.
it's pretty good.
Yeah.
But I had a reason why. And then I explained to everyone why. But there's the stories where I'm holding on to now because they haven't yet fulfilled their true intrinsic valuation. There's like what I call Warren Buffett value investing, like what is the
Right.
intrinsic value of this?
Right.
And then there's the peer valuation. What is this story worth versus everyone else in its peer group? Now that's one way of knowing when to sell, but never to buy. You want to buy on intrinsic value, not peer value. And then you use peer value to go, well, if these guys are trading at this and it's producing 1 million ounces and we're producing 1.2 million, okay, I can see the passive fund selling that to buy this, so now it's time we see the volume coming in, so you sell. You got to know what you're doing, and you know, it's very, it's as you know, one of my mentors and partners I manage his money, a guy named Doug Casey, he goes, the key to what I do is kind of like a combination between technical or academic, you know, the math style, but also the street style of never forgetting that this is such a fluid market. It's about the flow of capital and where it's going.
100%.
And then focus on the people. Everything is about the people.
I'm not going to make another investment in this space without getting you to tell me exactly why and exactly when. Next time we talk, we're going to talk about story. We're going to really get into stories because I think that drives everything. And
It's a great lesson about how the other stories came evolved and how so much of our business, it's not like reading a newspaper going, oh, I kind of like this story and no one else. You've got to be ahead of the news, and it's about who you know and being there before the analysts write about it, and you get all that extra value. And if you look, it's taken a toll by spending this many years on the road, but you get to have that Rolodex of phoning up a Cal Everett and have the first meeting he's ever had with you. Or like on the new market, which became Kirkland Lake, their first meeting was with me.
You've got flying to Davos on your recommendation tonight.
Right? So, and next week I'm flying into an area that had 5.5 foot of snow because I really want to go look at the core.
Yeah.
That's important to me and my team of geos.
Great.
So we go and do these things that ahead of the herd in a way.
Man, awesome. Thanks so much.
You bet.